In a landmark 6-3 decision, the Supreme Court struck down the core of former President Trump's America First tariff plan, halting a sweeping 25% tariff on all EU goods. The ruling redefined executive authority in trade, setting a precedent that limits the president's power to use trade as a unilateral tool of foreign policy. At issue, could a president invoke national security under Section 232 of the Trade Expansion Act of 1962 to impose broad tariffs without Congress? The court's majority said no. The executive had overstepped. Free trade advocates and major U.S. industries celebrated, warning the tariffs would have caused economic chaos. Supporters of the plan called the ruling judicial overreach, claiming it weakened America's ability to protect its industries. Global markets reacted instantly. Stocks surged, the dollar dipped, and volatility spiked as investors recalibrated. The decision reset the global trade chessboard, forcing corporations and governments to rethink strategies. This case, U.S. Chamber of Commerce v. Trump, will be studied for decades as a defining moment in the separation of powers. The legal fight pitted business coalitions and international allies against a populist vision of economic nationalism. The outcome reaffirmed the judiciary's role as a check on executive power in matters with global impact. This isn't just about tariffs. It's about the ongoing struggle to balance presidential power, congressional authority, and the rule of law in a connected world. The consequences of this day will echo for years. The road to the Supreme Court began in spring 2024, when Donald Trump, eyeing a return to the White House, unveiled his America First tariff plan, a blanket 25% tariff on all EU imports. The goal: protect U.S. manufacturing, cut the trade deficit, and pressure Europe to lower its own barriers. Trump argued only bold action could revive American industry, citing Section 232 of the Trade Expansion Act, a law meant for national security, not economic leverage. Critics called this a dangerous stretch, bypassing Congress and risking a trade war. European leaders threatened retaliation, escalating fears of a transatlantic trade conflict. U.S. industries reliant on European parts, auto, aerospace, tech, warned the tariffs would raise costs, disrupt supply chains, and kill jobs. Despite fierce opposition, the plan gained traction among those hurt by globalization, who saw it as a way to prioritize American workers. The debate dominated headlines, creating uncertainty for businesses and investors. The proposal became a symbol of the clash between protectionist nationalism and global commerce. This ideological battle set the stage for the legal showdown that followed. Legal challenges erupted as soon as the tariffs were announced. The U.S. Chamber of Commerce and National Association of Manufacturers sued, arguing the plan misused Section 232 and usurped Congress's power over foreign commerce. A federal judge blocked the tariffs, questioning the legality of such sweeping executive action. The government appealed, insisting the president had broad authority under Section 232 and that courts should defer on national security. The D.C. Circuit upheld the injunction, doubting Congress intended Section 232 for such broad use against allies like the EU. With courts split and stakes high, the Supreme Court fast-tracked the case. The May 2025 hearing was closely watched, with justices probing the limits of presidential power and the original intent of Section 232. The fate of the tariff plan and the future of U.S. trade policy hung in the balance. The court's decision would determine whether the president could unilaterally reshape global commerce. The legal battle became a test of the separation of powers. Today's ruling delivered the final word. The Supreme Court's ruling delivered a decisive blow to the tariff plan. Chief Justice Roberts, writing for the majority, clarified, Section 232 is not a blank check for the executive. The law was meant to protect specific defense-critical industries, not to overhaul trade with key allies absent a clear threat. The court found the administration failed to show a direct national defense risk from EU imports. The majority warned that allowing such broad action would let the president override Congress's core power to regulate foreign commerce. The dissent, led by Justice Gorsuch, argued for deference to the executive on national security, warning the court was overstepping. This split revealed deep divisions over executive power. The ruling set a new precedent. Future Section 232 tariffs must show a direct, tangible threat to national defense. The decision reasserted Congress's central role in trade policy. National security can't be used as a pretext for sweeping protectionism. The verdict signals that fundamental changes to trade require legislative, not unilateral, action. The executive's power in trade is now firmly checked. The global economic order just became more stable. The Supreme Court's decision triggered a surge in global markets. U.S. stock futures soared, led by technology and industrials, as investors cheered the end of tariff uncertainty. The threat of a US-EU trade war, which could have hit GDP and jobs, vanished overnight. The dollar weakened sharply, while the euro and other major currencies rallied. European exporters, especially in Germany, were seen as big winners. Commodity markets adjusted, oil prices rose on growth optimism, while metals dipped as protectionist barriers fell. Gold slipped as investors moved from safe havens to riskier assets. The market's verdict was clear open trade and stability beat protectionism. The surge in equities and currency shifts reflected renewed global confidence. Investors signaled a strong preference for predictable, rules-based commerce. The financial world endorsed the court's decision. The era of tariff-driven volatility was, for now, over. The ruling created clear winners and losers. EU nations, especially Germany, France, and Italy, saw their export-heavy industries spared from crippling tariffs. European automakers and luxury brands rallied, preserving jobs and revenue. In the US, industries dependent on global supply chains, autos, aerospace, tech, and agriculture, were major beneficiaries. American farmers avoided EU retaliation, keeping key export markets open. U.S. steel and aluminum producers who supported the tariffs lost hoped-for protection and now face global competition. The reshoring movement suffered a setback, as incentives to bring manufacturing home faded. Developing nations, though not direct targets, benefited from the stability, avoiding the fallout of a global trade war. Multinational corporations and consumers gained from lower prices and open markets. Protectionist interests and economic nationalists lost ground. The decision reinforced the value of global integration. The world's trading system breathed a sigh of relief. Experts are split on the ruling's long-term impact. Some hail it as a vital course correction, preventing economic self-harm and reaffirming America's commitment to open trade. They predict greater stability, investment, and stronger alliances. Others warn the underlying anxieties, job losses, wage stagnation, and globalization's downsides remain unresolved. Without new policies, protectionist pressures could return. America First supporters see the ruling as a blow to sovereignty, arguing it weakens U.S. leverage and leaves industries exposed. The debate over trade's future is far from settled. The legal question is answered, but the political and economic battles continue. The next chapter depends on which vision prevails. The long-term effects of the ruling will unfold over years. Businesses, freed from uncertainty, are likely to reinvest in transatlantic supply chains and partnerships. Foreign direct investment between the U.S. and Europe is expected to rebound. The decision shifts trade policy power back to Congress, making future changes slower but more stable. U.S. trade policy may become more predictable, fostering stronger international relationships. The court's strict reading of national security could influence global norms, discouraging protectionist abuse. The WTO and other bodies may adopt tougher standards for trade barriers, yet the economic challenges that fueled the tariff push, trade deficits, job losses, and community dislocation, remain. The political energy behind economic nationalism is still potent. The future depends on whether policymakers address these issues with new tools, worker retraining, social safety nets, and smarter trade deals. The binary of free trade versus protectionism is giving way to more nuanced solutions. The ruling offers a chance to rethink global trade's purpose. The world is watching what comes next. The Supreme Court's decision to halt Trump's tariff plan is a watershed for U.S. and global economic policy. By blocking unilateral tariffs, the court reasserted Congress's authority and checked executive power. The ruling prevents national security from being a catch-all for protectionism, reshaping future trade strategy. Markets rallied, industries breathed easier, and a trade war was averted. Exporters and global supply chains won, protectionist interests lost. But the core political tensions remain unresolved. Optimists see a return to stable, rules-based trade. Pessimists warn the roots of protectionism are still alive. U.S. trade policy will now require more deliberation and congressional action. The debate over balancing national interests and global integration continues. The world now faces a new question. With a trade war averted, what will nations build in its place?